On Feb 1 last year, that's 2022, Finance Minister Nirmala Sitharaman announced the setting up of an expert committee to study and suggest changes to remove end-to-end friction in regulation and taxes for India's PE and VC investors. The committee was also mandated to identify potential accelerants to make India a top investment destination. As we head towards Budget 2023, the committee has not only been set up, but it's also submitted its report to the Finance Minister. In fact, the Indian Venture and Alternative Capital Association, or IVCA, met the committee and flagged off as many as 160 issues that required reform, particularly the long-standing ones, such as the disparity in long-term capital gains tax on the sale of unlisted versus listed shares, the double taxation of ESOPs, and the urgent need to put to work large unused pools of domestic capital, among many others. As we said, these were only a few of the demands in a list that is quite long, but what is encouraging is, before submitting the report, the committee's chairperson, M. Damodran, told CNBC-TV18 in an exclusive interview that the committee has indeed taken a hard look at the regulations that are perhaps past their sell-by date. So there is hope that this year's budget could put in place more accelerants for the Indian startup ecosystem, more so after the previous year's budget, which was called a Budget for Digital India. This year, the Finance Minister could once again look at giving a impetus across sectors from agriculture and healthcare to education and financial inclusion. With exactly a week to go to the budget speech on the 1st of February, let's hear out what startups and investors want from Budget 2023. Hello and welcome to Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. To take this discussion forward, we're now joined by Gopal Srinivasan, the Chairman and MD of TVS Capital Funds, Rema Subramanian, the co-founder and managing partner at Ankur Capital, and Vineet, the founder and Chairman of Aavishkaar Group. Gentlemen and Rema, many thanks for joining us here on the program. Mr. Srinivasan, let me start by asking you, the big expectation and hope at this point in time is that the Damodran Committee's recommendations will find their way into Budget 2023. As we pointed out, Mr. Damodran, in an interview with CNBC-TV18, has said that the committee has looked into regulations that are past their sell date, past their expiry date. Now, we don't know what the Finance Minister will unveil, but of the long list of issues that the IVCA identified, and 160 of them, what are the top things that you would be happy with if they go through?
Shireen, thank you for having all of us on the show. This is the 10th year of the AIF industry. And if you go back from the beginning to now, it's grown at close to 100% CAGR from 2012 to today. So it's a very important landmark for us at 7 lakh crore, 7 trillion rupees of total commitments made to the AIF 1 and 2 industry approximately, that this can be a budget where we can signal that we recognize the AIF industry to be as integral to all laws, whether it's tax or company affairs or any other law, as mutual funds have or NBFCs are. That is probably at a philosophical level, the one that we want to really see, that we are an industry, we represent 7 lakh crore or 7 trillion rupees or 2.5% of GDP, whichever number you wish, as part of the overall fabric of providing risk capital, risk equity capital particularly, and risk debt capital also to the industry. So the number one wish for us is that we and the public markets should be seen exactly on the same lines as far as long-term capital gains is concerned. Our second wish is that the business model of the AIF industry, for example, carried interest, by interpretation of law, it is capital gains, but it is not called out, and therefore leaving it to some young assessing officer in Kanpur or in Coimbatore to actually decide whether this is capital gains or not. So we want the elements of the AIF design to be baked into tax law. For example, in an AIF, we buy a share for 100, but actually the commitment we receive from the investors 120 because those are the additional efforts and expenses. But it's not carried at 120 as it should be if it's passed through, but it's taken as 100. So it's things like that, what we call the elements of our design to be baked into law. If these two happen in a budget which is likely to be one to signal stability in a pre-election year, we do hope that this will be not the digital India budget. This will be the Atmanirbhar AIF budget for promotion of risk capital in India. I'm sure they will come with a cleverer name than that, but that's what we really need.
In terms of reducing friction, in terms of accelerating growth, supporting supporting the startup ecosystem. What do you believe the budget can do?
So thanks, Shri, and I think Gopal has covered some of the very important points. But I think one thing that probably government can do and can do very quickly is to acknowledge that we are living through very troubling times, and recession globally may mean, and India needs to grow while the world is at recession. That means you need to actually find ways of supporting the AIFs who actually have 80% of their capital coming from foreign shores. Now, when a country as large as ours, where our ambitions are to go from roughly 80 billion odd dollars, 7 lakh crores, to let's say 450 billion or maybe $1 trillion, roughly 20% of the GDP 5 years, 7 years down the line, the domestic capital has to play a very, very important role. And the budget should and must play a significant role in opening up the coffers of the insurance agencies, the large capital that is lying with the government. And it's not that government has not tried, but it has still been much at a much smaller scale. I mean, there's nothing that takes away from the 10,000 crores should be fund of fund, or the 50,000 crores fund of fund under the Self-Reliant India, or even the 1,000 crore NABARD fund of fund for agri blended finance, under blended finance structures. But there is much more needs to be done for us to find a balance between the foreign capital and the domestic capital.
You know, speaking about this balance between foreign capital and domestic capital, and Gopal Srinivasan, I want to come back to you because, again, this has been something that we have discussed for long here on this show. And, you know, people like you and Mohandas Pai have put forward suggestions on how the government should look at unlocking value and domestic capital as well. Again, on that, you know, to Vineet's point, let's be specific. What is it that you realistically expect, and what would you be what would you be happy with if it goes through?
So, Shireen, we must first accept the fact that we are in an emerging state of the AIF industry. If what we should be doing and what we are doing are at being maybe at a 30-40% stage of development, which means still when domestic LPs evaluate us, let us say an insurance company, some of them are very sophisticated, some of them are at a basic level because it is their first and early investments. And you know, ours is an industry, Shireen, which takes 7 to 8 years before you can get comfortable with a fund. Given that the AIF industry itself is some 10 plus years old, 15, 20 years if you take VCF regime, we are still at an early stage of development. So keeping that in mind, especially for pension funds, especially for PFRDA, where 90% of the PFRDA pool is the public pool, government servant pool, only 10% is private. It is important that we create an architecture of funds, experts who can do the evaluation, select the funds, basis a very professional approach, and then allocate money to them. SIDBI and State Bank have been two great examples, and to an extent NIIF also. These are organizations that have learned to understand smaller funds, smaller VC funds, private equity funds, debt, venture debt, or really mezzanine debt funds, and been able to allocate money to them. So I just want to bring to attention, out of the 7 lakh crore in the AIF, about 60% is Indian, 40% is domestic. But what Vineet said, 80% of the total invested in India, which includes the foreign funds. So if you take our usual number of, say, 5 billion or 6 billion or whatever number we want and call it 50, 60 lakh crore, 5, 6 lakh crore, in that 80% is foreign. So I want to basically say that this fund of funds was announced very unambiguously last year by the finance minister. Madam Finance Minister talked about blended fund of funds and sector focused as well, agri, deep tech, rural, etc. Creating that fund of fund architecture where PF and EPFO can put money is a single point solution where the central government can make a difference, because this comes under the control of the central government. This is not a SEBI rule or any such thing.
So let's go back to the key accelerants that you believe the budget can really move the needle on.
So a couple of things. Sorry about it. Technology decided to at the right moment when I started speaking. So a couple of things. One is the fact that, for startups, one of the key things is going to be the talent and keeping the talent. The ESOP regime in India is still not very conducive for talent acquisition and retention. The tax laws should, as far as ESOP goes, this double taxation and paying taxes much before you realize this, especially in an uncertain environment, is a double whammy for most employees. So I think that whole ESOP regime, the taxation on ESOP should get far more friendlier. That should become a tool for startups, a powerful tool for startups to get the best talent. And if that can happen itself, that would be a great, this is one. The second is ease of doing business. Still, while it has eased quite a lot, I think that ease of doing business should be further streamlined for them. The Companies Act and the whole taxation regime is still not very startup friendly. That's the second one. The third one is from the fact that the 5 year, that ATIAC, which is 5 years, should be extended to 10 years. In the first 5 years, the exemption hardly plays out in very few cases. So to ensure that the startups do get a much longer period to actually get the benefit of that section, it should be extended to at least 10 years, is what I would think is the fact.
Vineet Rai, let me pick up on the point that Rema made, and she's preempted what I was going to address with each of you. This is a comment that's coming in from PhonePe on moving the domicile from Singapore to India. Samir Nigam saying that our investors have had to pay at least 8,000 crore rupees of taxes due to the domicile shift to India. This is also like a capital gain transaction. This is a very stiff shock. Sanjeev Bikhchandani tweeting saying, PhonePe CEO Samir Nigam estimates that at least 20 unicorns want to flip back to India if regulations enable it. The government needs to launch a Ghar Wapsi program for flipped startups. Vineet, first, how do you get people not to move out to India? Second, how do you get people to move back to India?
I think these are very basic and very important things that the government can actually make a big difference on. Beyond what Gopal, me and Rema are talking about, what has happened with us as investors. But I think there is a significant value creation that can happen as the startup ecosystem evolves, both because India is actually a large economy and India is paying a reasonably high valuation in case you actually list your companies. You're able to build up very good business model and you're able to list and go private. It can create significant value, which actually is a reasonable reason for people to actually flip back to India. Now, so there are incentives, but then there are costs being imposed because we seem to probably want to make money too early. I think 8,000 crore is a very nice number, actually, frankly, but there is no real capital gains taking place. And this issue actually persists significantly within M&A that takes place in India. So it's not just about companies flipping from outside into India. This is actually a serious problem.
Gopal Srinivasan, do you anticipate that there will be an acknowledgement, be any kind of redressal on either of these issues? One, trying to get people not to move out of India to start with, and we've seen that flight over the last few years, and B, to ensure that those who have moved out find it easier to move back.
I think Vineet made some really good points. Fundamentally, Shireen, from my point of view, a lot of people move out because if you do the deep analysis, at a seed and Series A stage, basically, the foreign funds, the foreign VC funds, sell them the Kool-Aid of basically the advantages of relocating to Delaware or Singapore or wherever. So that, I think, is where the core issue is. We need more AIF-type funds participating in that area, unlike the foreign funds with their programs who attract the seed and Series A. जो घर वापसी करते हैं, पहले घर से निकल के जाते हैं ना. So fundamentally, the question really is, why did they leave? Because it's a B2B SaaS company. And some foreign fund sold them the idea that going there is the only way. But after the success of Indian listing and the disasters faced in NASDAQ, I think people are more ready. So I think it has to be a concerted effort to get more seed and Series A funds, like what Rema does, for example. They are the ones who will be able to get these companies back to India. Second is ESOPs, already been covered. Already government has made some good steps on ESOPs. They made some changes in the last 2 years where they said if you get IMB, Interministerial Board approval, you can get up to 4 or 5 years as a exemption. But that needs to be not only made 10 years, but it should not apply if you leave the company. Such tweaks have to be done. So 2, 3 such messages need to be given clearly and unambiguously by the government to order to keep this movement going.
Yes, Rema, Mr. Srinivasan and Vineet, I want to understand from you, there are concerns at this point in time on the health of the startup ecosystem. Of course, valuations across the board globally have come off. We've seen the kind of pain that the technology sector globally is faced with, and that story is playing out here as well. But there are questions today. Vineet, I'm going to get you and Rema to come in before I come to Mr. Srinivasan. There are questions on overestimation of market size, on overestimation of the monetization capability, and at the end of the day, what really this means as far as this whole sort of unicorn universe is concerned. Vineet, let me start by asking you, how worried are you today?
So, Shireen, I have never been worried because as investors, we have to be more optimistic than entrepreneurs, and entrepreneurs are a very optimistic breed. So I think that the critical and very important part of this entire engagement that we're talking about, specifically about what is happening because there is actually change, there is valuation dips, etc. These are things that one should not be really concerned about because as investors, as fund managers, we are long-term players. So the capital has not vanished. What has actually happened is there is a mismatch between expectations of the entrepreneurs and what they were expecting will happen. There has been a little bit of lull because everybody, when you see a fairly significant change, want to step back and rethink and reflect on how do you participate. What has actually happened in India is a large number of people want to follow rather than lead. They are looking for lead investors because valuations now has become a fairly sensitive issue. And lead investors are like Rema, Aavishkaar, and Gopal. We are the kind of folks, because we are on the ground, we are actually spending significant amount of time. We have to play a significant and more role in attracting the capital to come in and basically bring in those who are actually sitting on the sidelines wanting to do a follow-on investment. I can tell you there are 10 examples in my own portfolio where there are 5 investors who have actually said we are committed to come in this round, but not willing to find a lead investor. And that actually tells you that you need to have significant understanding. So there is becoming this sort of a differentiation that is coming in.
But what is the deterrent there? What is the deterrent there, Vineet? Is there a lack of confidence? Is it a confidence erosion? What's holding the lead investors back?
I think that it's not about lead investors being held back. There are a lot of people who don't want to take lead. And one of the reasons, the difference is actually the capability to make that assessment. All the issues that you point. Are you making the right assessment of the market? Are you on the field? Are you making one single visit and taking an assessment? You like a great presentation and then you are making a decision? Or do you really understand the market? Do you understand the challenges of monetization? Can you actually support the institution to reach where they are? So these are the differences between set of investors who are deeply involved and those who are actually far away, very important part of the ecosystem because you cannot not have them, but may not want to actually lead given the kind of the up and down things have happened. So.
Gopal Srinivasan, we're completely out of our time here. 5 seconds, sum up the mood for us ahead of the budget.
I think, my mind, what this budget needs to do is bharosa. Fundamentally, trust AIF managers, trust the startups to go through the surf of Alan Greenspan-created massive liquidity, further accelerated by COVID, but sharply corrected by excellent Reserve Bank managers. So allow the second thing to happen. And my dream, Indian fund managers should be investing across the world. Remove all limits on us investing abroad. Let the insurer not tell us we can't invest abroad. Let us go and create fund managers from India who will show the world how to build great companies. That's
Gopal
my
Srinivasan, Rema Subramanian and Vineet Rai. We will get you back on the 1st of February to decode the fine print of what the union budget finally unveils as far as the startup ecosystem is concerned. Atmanirbharta, Bharosa, and of course, giving the AIF industry a further fillip. That's the big ask here of Gopal Srinivasan, Rema and Vineet. Many thanks for joining us on this special edition of Young Turks. We'll take a break. There's a lot more coming up. Don't go anywhere. We're back in a minute with more.